So guys, what's up guys? Today we are going to be talking about market structures in trading. It's more or less like I keep telling you guys that structures are very, very important in trading. It's more or less like, let's say now, as a beginner trader, you need to understand what market structure are for you to know how to trade the market. So guys, let's divert into the charts without wasting much time. So when it comes to market structure, first of all, ask yourself this question. Market structure simply means the movement of the market. It's basically how the market moves. So now, for example, now, as a trader you are, or let's say day trader, swing trader, or let's say any sort of trader or any type of trader you are, market structure plays a very big role in your trading, most especially as a beginner trader. But today, I'll be talking about this market structure from, let's say, whether you're a beginner trader, advanced trader, or any type of trader at all. So let's head over to the chart and show you guys some quick. So guys, what's up guys? Today we are going to be talking about market structures in trading. As I always say, structures are very, 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 very important. Most especially as a beginner trader you are, you need to understand what structures are on this market. So I don't want to waste much time. Let's proceed. When it comes to market structure, first of all, ask yourself, what are market structure? Market structure simply means the movement of the market. So any type of trader, let's say swing trader, day trader, or scalper, any type of trader you are, you must understand what this market structure are. Market structure is just like, let's say now, it's just like the bedrock of every trading strategy out there. If you don't know or understand what this market structure are, trust me, I'm not sure whether you're going to understand this market or not. So when it comes to market structure, we basically have three types of market structure in trading. Number one, we have an uptrend. It's just like, number one, we have an uptrend. An uptrend, we have downtrend. We also have ranging market. We also call it a flat market, consolidation. All of them are the same thing. You can also call it indecision market. They're all the same thing. What you see is just like more or less like different types of traders. Let's say maybe they can use different names for all this. So first of all, let's proceed with an uptrend. For example, now an uptrend simply means, like, just as I always say, keep it simple. An uptrend simply means a market that's pushing up, or let's say a market that's trending to the upside. They are all the same thing. So when it comes to an uptrend, what is an uptrend? An uptrend simply means a market that's pushing up. But the problem here is that as a trader you are, this market that's pushing up, they don't push up in straight lines. They don't push up in straight lines. They push up in series of impulsive move and retracement. Impulsive move and retracement. Guys, just calm down. I will talk about this impulsive move and retracement. So first of all, when it comes to a downtrend, as a trader you are, when it comes to a downtrend, the only opportunity you are looking for is to buy. Only. When it comes to a downtrend, the only opportunity you are looking for is to sell. Why, when it comes to a ranging market, sit out. Don't change the ranging market. Why? Because the probability of the market pushing to your direction is 0 to 10%. I don't know if I'm making sense, guys. So as a trader you are, it's a must. Stay away from the ranging market. Stay away from the ranging market. Some traders do trade ranging market, but for me, I don't recommend changing ranging market. The probability of the market pushing to your direction is 100% low. So you must definitely stay away from the ranging market. Only stick to trading trending market. That's an uptrend or a downtrend. So it's actually very, very important. When it comes to this uptrend, an uptrend simply means a market is pushing up. But the problem here is that this market, they don't push up in one straight line. They push up in series of, as I just said now, impulsive move and retracement, impulsive move and retracement, impulsive move and retracement, impulsive move and retracement. First of all, let's divert into an impulsive move. Ask yourself this question: what is an impulsive move? As I always say, keep it simple. An impulsive move simply means stronger moves in the direction of the trend. Why retracement simply means weaker short-term moves against the trend. So this definition are actually very, very, very simple. Like as a trader, you must, it's a must. Impulsive move and retracement is a must. You must definitely know how this thing works on this market. So first of all, let's divert into impulsive moves. As I just discussed now, impulsive move simply means stronger moves. Now, let me give you guys an example. This move here this move here to the upside is called an impulsive move. This is just like an instance of stronger moves in the direction of the trend. I don't know if I'm making sense, guys. Please, if I'm making sense, let me know. An impulsive move simply means stronger moves in the direction of the trend. So, for example, now, let's say now, this is an example of an impulsive move. Retracement. This retracement, this guy down here simply means weaker short-term moves against the trend. So, if you pay good attention now, you see that this guy down here is weaker than this impulsive move up here. I don't know if I'm making sense. Good. So now, this is an impulsive move, retracement, impulsive move, retracement, impulsive move, retracement, impulsive move, retracement, impulsive, like that. So these are actually very, very, very important. Why when it comes to the retracement move, retracement is just like the inverse. All these weaker short-term moves against the trend down here. This guy down here, one sec. This guy down here, this is a retracement move. This guy down here, this is a retracement move. This guy down here, this is a retracement move. This guy down here also, this is a retracement move. So if you pay good attention now, you will find out and observe that this guy, all this guy I just highlighted now, they're just like weaker short-term moves against the trend. So it's actually very, very simple. So let's head over to the chart and show you guys an instance and all. So if you observe now on this chart we have over here on ADUSD, we have this guy, we have this range, we have this guy up here. Market has successfully broken this range in the upside. Now pay good attention to me. Remember I taught you guys that an uptrend simply means a market that's pushing up. I don't know if I'm making sense. Good. So now if you observe now, you see that market successfully created this high up here, created this higher low. Don't worry, guys, calm down. Still teach you guys higher highs, higher lows, break of structure, and shift in market structure. You don't have to rush the process. So if you observe, this guy created this higher low, pushed up, break above this guy up here. Successfully, market has created another break of structure. Market came again, created this higher low, pushed up again. So what am I trying to say? Market pushed up now, created this impulsive move, retracement, impulsive move, impulsive move, retracement, impulsive move, retracement, like that. So this is actually very, very, very simple. You just have to go and practice. I don't know if I'm making sense, guys. So let's divert. Let's move over to the chat. I think you stopped. Okay, guys, we stopped here. Downtrend. So when it comes to downtrend, first of all, ask yourself this question: a downtrend is just like the inverse of an uptrend, just like an inverse of an uptrend. So guys, let me show you guys something really quick. First of all, we have this downtrend here. First of all, ask yourself what is a downtrend? A downtrend simply means a market that is pushing down. Like as I just said earlier, this market they can never push down in one movement. Never. This market moves in series of impulsive moves and retracement, impulsive moves and retracement. There must always be that retracement. Without those retracements, the market can never continue its movement. The market can never continue its movement. So we have something like this when it comes to a downtrend. We have this guy down here. We have this low. We have this lower high. As I just said, you guys should just calm down. I'll teach you guys what a lower high, lower low, break of structure, and shift to market structure is. So guys, we have this lower high up here. We also have this lower low, lower high, lower low, lower high, lower low, lower high, lower like that. And another thing I want to tell you guys today, shit. So another thing I want to tell you guys today is that this impulsive move down here, this impulsive move down here, this impulsive move down here, you can also call it a lower low. This retracement to the upside, you can also call it a lower high. This impulsive move to the downside, you can also call it a lower low. This retracement to the upside, you can also call it a lower high. This impulsive move to the downside, you can also call it a lower low. This retracement to the upside, you can also call it a lower high. This impulsive move to the downside, we can also call it a lower low. This retracement to the upside, we can also call it a lower high. This impulsive, like that. So what am I trying to say? Another name for an impulsive move is also called a lower low, while another name for a retracement is also called a lower high. Now, guys, pay good attention to me. Let me teach you guys what higher low, lower highs, lower lows, and higher highs are on this chart. So guys, let me teach you guys what higher lows, higher highs, lower highs, and lower lows are on this chart. So when it comes to an uptrend, we have something like this. When it comes to an uptrend, we have something like this. We have this high up here. We have this higher low up here. So please pay good attention to me. Pay good attention to me. This is where most traders find it difficult to understand. Pay good attention to me, please. So please pay good attention to me. This is where most traders find it very, 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 very difficult to understand. So we have this high up here. We have this higher low up here. Pay good attention to me. Remember, we have this high up here. This high up here is also called a resistance level. Don't worry, I'll still teach you guys what support and resistance are on this chart. So in a scenario whereby market comes and take out this bad guy up here, this guy up here, This guy up here now, remember that if market stays below this guy down here, this is still called a high. But in a scenario where market come and take out this guy up here, this is successfully called a higher high. Why is it called a higher high? Because market has successfully taken this guy. Because market has successfully taken this guy. One sec. Because market has successfully taken this guy up here. That's why it's called a higher high. And another name for this higher high is also called a break of structure, aka BOS. BOS, that's a break of structure. That's a break of structure. So I repeat, we have this high up here. We have this high up here. We have this higher low. So in a scenario where the market come and take out this bad guy, remember that if market stays below this guy down here, this is called a high. But in a scenario where the market come and take out this guy up here, automatically, 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 this is called a higher high. And you can also call it a break of structure. I don't know if I'm making sense. You can also call it a break of structure. So, guys, that is just it. And like that, we have this higher low. In the scenario where the market comes and take out this guy up here is also called a higher high. We have this higher low. In the scenario where the market come and take out this guy up here, you can also call it a higher high. Another name for this higher high is a break of structure. I don't know if I'm making sense. Why is it called a break of structure and why is it called a higher high? Because, pay good attention to me, these are where most traders find it very, very difficult. Why is it called a higher high or a break of structure? Because market has successfully broken this guy, this high up here, like this previous guy up here. That is why it's called a higher high or a break of structure. It's very, very simple. Very, very, very simple. Like this is just very, very simple. So like that, let's hold over to lower highs and lower lows. Lower highs and lower lows. So when it comes to lower highs and lower lows on this chart, lower highs and lower lows is just like the inverse of higher highs and higher lows. So guys, let's proceed. We have this guy down here. This guy down here is called a low. Why is it called a low? Because market has not yet created any lower low or previous lower low. So that's why this low down here is called a low. I don't know if I'm making sense. Assuming now we had something like this. Assuming now we had something like this. Assuming now we have something like this. We are going to call this guy down, this bad guy. We are going to call this bad guy down here, the lower low. But no, market has not yet done something like that. That's why we are calling this a low. I don't know if I'm making sense, guys. So that's just it. We have this guy down here. We have this low down here. We have this lower highs. We have this lower low. We have this lower high. So pay good attention to me. As I said, these are just where most traders find it very, very difficult. We have this guy down here. We have this low down here. So in a scenario where market pushes down, remember I taught you guys that if market stays above this level, this is still called a low until this bad guy breaks below this previous low. What is it called? A lower low. You can also call it a break of structure. I don't know if I'm making sense. You can also call it a break of structure. Lower lows or break of structure. This is for downtrend. While higher highs and break of structure for an uptrend. I don't know if I'm making sense. These are just where most traders find it very, 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 very difficult. Very, very difficult. Even I myself, like trust me, I struggled with this shit, but with consistency, I overcome it. I don't know if I'm making sense. So in the scenario market, take out this guy, this bad guy down here, automatically it is a lower low. And you can also call it a break of structure. So we have this lower high, lower low, low, like that, like that. So the last topic I'm going to talk about on this chart before we dive into the chart and show you guys some certain examples is change of character. change of character. You can also call it a shift in market structure. Change of trend. They're all the same thing. I'm just trying to teach you guys all these things so that you know all the meaning. Because different types of traders, like they literally call this all these different names. That's why I have to teach you guys all these names or change of trend. So when it comes to a change of character or a change of trend, basically this is also where most traders find it very, very difficult in trading. But today, we'll be teaching you guys everything about this change of character and change of trend. So when it comes to this change of character and change of character and change of trend only occurs in a scenario whereby market take out the previous candle. This is for, let's say for a higher low, the previous candle to the downside, or take out the previous candle to the upside. This is for a lower high. I repeat, let me show you guys something real quick. So guys, let me show you guys something real quick. When it comes to a shift in market structure, we have this high, we have this higher low, we have this higher high. Please pay good attention to me. One sec, I need to look for a very nice space for this. So pay good attention to me. We have this high up here, we have this higher low, we have this higher high. As I just said, why is it called the higher high or a break of structure? Because market has successfully taken this previous bad guy. Yeah, that's the body of a candlestick has successfully closed above that previous high. I don't know if I'm making sense, guys. So that is just it. We have this higher low. So if you pay good attention to me now, I told you guys that you must understand what market structure are. If you pay good attention now, you see that all these higher lows now, none of them they break past each other. Like none of them they break past each other. None of them they break past each other. None of them they break past each other. But in the scenario where market comes and take out this guy, this bad guy, this previous higher low to the downside here, this previous higher low to the downside here, this is called a shift in market structure. I repeat, two things that classifies a shift in market structure is, please pay good attention to me. Number one, the body of a candlestick must close below the previous higher low. Number two, please, if it's weak, sit out. Weak is just like a manipulation, please. If the wick closes below this higher low, please just sit out. The body of a candlestick must close below the previous higher low before you can successfully call it a shift in market structure or a change of character or a change of trend. I don't know if I'm making sense, guys. All these are all the same thing. They're all the same thing. I don't know if I'm making sense. Good. So now, another thing I want to tell you guys is that, please, if the market shift structure immediately, don't enter for a sell immediately. Don't enter for a sell immediately. Wait for the market to create a lower high, push down again, create another lower low. Then once you just use your two eyes and let's say I found out that the market has started retracing again, you should take your trade from here, then ride it to the downside. Don't worry, I'll still talk about zones on this chart. It's gradual. I'll still talk about zones, support and resistance, candlesticks, all these, I'll still talk about them. So guys, you don't have to rush the process. It's very, very, very simple. So now let's divert. This is for an uptrend. Let's divert for a downtrend. So when it comes to a downtrend, we have this guy down here, we have this low, we have this lower high, we have this lower low. As I just discussed earlier, why is it called the lower low? Because this bad guy down here successfully broke this previous guy. That's the bottom of the candlestick has closed below this previous low. I don't know if I'm making sense. You can also call it a lower low or a break of structure. So we have this lower low down here, we have this lower high, we have this lower low. We have this lower high, we have this lower low. Pay good attention to me. So if you look closely now, you see that on all these structures I just mapped out now, none of these lower highs now they break past each other. None of them they break past each other. But in a scenario whereby, please pay good attention to me. In a scenario whereby market comes and take out this previous guy, this bad guy, this previous lower high to the upside, I repeat, if you observe now, all these lower highs were there here, none of them they break past each other. I don't know if I'm making sense, but in a scenario whereby market comes and take out the previous lower high, always use the previous lower high. Two characteristics of a shift in market structure is number one, the body of a candlestick must close above or below the previous higher low or above the previous lower high, and also always use the previous lower high. This is for a downtrend, and always use the previous higher low. This is for an uptrend. Sorry. I don't know if I'm making sense. So guys, this is just it. The same market comes and take out this previous lower high to the upside automatically. This is called a change of character or a shift in market structure. They also call it a change of trend. Guys, I don't know if I'm making sense. So that is just it. It's actually very, very simple. It's actually very, 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 very simple. So now let's head over to the chart to show you guys some certain examples. So pay good attention to me, guys. If you observe now on this chart we have here, you see that, please pay good attention to me. I'm just trying to explain what the shift in market structure are on this market. So we have this high up here. Pay good attention to me. We have this higher low. We have this higher high. It's more or less like anytime you see all these one candlesticks, maybe this one, something like this one, something like we are there, something like this one, something like we are there, something like this guy down here, something like this one. All this one candlestick, something like this one. All of them, they are all one movement. I don't know if I'm making sense. So we have this higher low, we have this higher high, we have another higher low, and we have another higher high. Please pay good attention to me. We have another higher low. Now, this is where the trade comes in. Market push stop, failed to create a new high. Pay good attention to me. Failed to create a new high. The market pushed down again. Now, pay good attention to me, as I just explained earlier. If you observe now, all these higher lows were there here now. None of them they break past each other. Like all of them they stay on top. I don't know if I'm making sense. None of them they break past each other. None of them they break past each other. I don't know if I'm making sense. But if you see me your chart a little bit now, if you see me your chart a little bit now, you see that this market pushed down, this guy pushed down, and this guy pushed down here, broke below this previous higher low. Pay good attention to me. Broke below this previous higher low. Automatically, this is called a change of character. What is this change of character? This change of character simply means you should stop looking for buys. Simply stop looking for buys and start looking for sales. Now, another thing here is that I don't want you to start looking for sales immediately. As I just discussed earlier, allow the market to push down. Allow the market to push down. Create another lower high before you pick the next step to the downside. So if you guys observe now, you see that the moment this market shifted structure now, the moment this market shifted structure, the market started trending to the downside, series of lower highs, lower lows, lower highs, lower lows, before it started all these ranging stuffs over here. So guys, I don't know if I'm making sense. So this is just very, 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 very simple. Like this is just like very, 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 very simple. I hope anyone know that. Let's say that come across this video, trust me that they must know or understand that this is just like the simplest way I can explain what market structure are on this chart, because market structure is more or less like, so because market structure is more or less like, it's very, very important. It's just like the bedrock of every trading strategy out there. Whether you are using any sort of trading strategy, trust me, without market structure, you will know what you are doing on this chart. So guys, it's very, very simple. If you come across this YouTube channel, please like and subscribe and share. So, cheers up, guys.